Hey everyone, and thanks for jumping back into the Equityverse. Today, we're going to talk about the Volatility Index, or the VIX, and how it can be useful in navigating the S&P 500. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So the last time we spoke about the VIX was several months ago, also when it in fact was in a downtrend, coming down to sort of these levels over here. And the general argument that we put forth was that at least so far, within, at least over the last year or so, whenever the VIX gets to some of these lower levels, it's getting pretty close to likely turning back around. Now, I will say, just because the VIX is at 17 doesn't mean that it can't go lower. This is the lowest level that it's really been at since basically the very beginning of 2022. It doesn't mean that it can't go lower. And in fact, there's been periods when we were spending a very long period of time at volatility levels much lower than 17. But if you look at the trend, at least since October of 2017, it's that the VIX has been putting in higher lows off and on. I mean, we've had periods where it shoots up. Note that these major times where it's shooting up, there's some, something big going on within the S&P. Oftentimes, of course, it corresponds with a move to the downside, right? Like here's March of 2020. And of course, we could go through the years, and we'll go ahead and do that. But if you pull up the S&P 500 and just sort of overlay it, right, you can see that the blue line, right, these major moves to the downside within the S&P 500, you'll see the VIX spiking up. And you might have heard people say, well, if there's a massive spike up in the VIX, say 40 or 50, that could mark sort of this big event that I think a lot of people are sort of counting on. But one of the things I think we should really look at is that locally, what has been going on. Because, of course, there's some interesting trends over here. What's been going on locally? One of the things you'll note is that any time that the VIX has gone up into this, say, 30 to 35 region, it has, in fact, marked sort of these local bottoms. Okay, so whenever it has gone up to this level, right, up to these levels over here, it has generally marked local lows on the S&P 500, right? You can see this one here as well. This move right here marked this local bottom on the S&P 500, and even this short-term move up to the upside more or less marked that local bottom on the S&P 500. Okay, and you could sort of go back in time and see this in other cycles as well, or maybe at different ranges. But also what you'll see is that these lows have marked sort of these tops, right? So here's a low that ended up marking that top, and that low, of course, corresponded to around 19 or so. This low right here marked that top on the S&P 500, and then this low here marked that top, and then of course we had this low right here, which marked that top, right? So when the VIX is at a low level, or at least, and this is what we talked about, back in the video that we did several months ago, when it gets to these low levels, it doesn't mean that you're going to immediately see the S&P 500, move back down. But it does sort of show that the risk is there for a move back up in the VIX, and if it of course does, it would be indicative of the S&P 500 moving down. Now, right now, we find ourselves with a VIX of 17, right? So 17.07 to be exact. But again, this is the lowest level we've seen since really going all the way back to the beginning of 2022. So it's been a long time since we've seen the volatility index this low. And now I do think that we are getting into some dangerous territory if it's going to continue in this range. Then again, the biggest caveat is that we've spent a lot of time at much lower valuations during a secular bull market in stocks. Again, the other counterpoint to that, though, is that it has sort of been on this slightly increasing slope, or this trend line, right, slowly moving up. But again, the VIX has been putting in higher lows. And not only is it at these lower range that it hasn't really been at for, 16 months now, it's also corresponding to sort of this lower range, or these higher lows on the VIX that we've seen since sort of the end of 2017. So I'd be interested to see what happens here with the S&P 500 over the next couple of weeks. Do note that, the last time I think we made a video on this, when the VIX was pretty low, it didn't necessarily mean that the S&P had to turn around immediately, but it wasn't too much longer before we did see a pretty significant decline in the S&P 500. It didn't mark a new low with the S&P, but it did mark sort of a fairly substantial move back to the downside. So we are getting into some pretty low levels here for the VIX once again. And if we start to see it sort of spike and the S&P come back in for a few days, and it could be indicative of sort of another leg lower on the S&P 500 sometime in the next few weeks. The other thing that I think is interesting to look at, and when I say another leg lower, I just mean at least a correction, not necessarily an immediate new low, but at least a correction back down. One thing also to consider is that there's sort of been this compression here, right? Like, even though the VIX has been putting in sort of these higher lows, and even though it's been range bound, the upper part has been putting in lower highs. So we haven't really seen nearly as much volatility as the year continues to go on to the upside. So I'm somewhat interested. This would likely converge at some point, by mid 2024. And I mean, of course, it probably won't take until then to see some type of breakout to the upside or the downside. But I imagine that if we continue to sort of just stay in this range like this, eventually it's going to have to break out to one side or another. And if it's a break to the downside, then that would obviously be quite bullish. If it's a break to the upside, then it could be the reconciliation of all the indicators building up, and then the macroverse saying that there's a recession, sort of not now, but at some nebulous point in the future. It could be the culmination of that. So I do think the VIX is probably worthwhile to continue to follow. If it does move back up, do note though that we don't necessarily have to expect it to come back up to the 30 to 35 range. It might only make it up to the 25 to 30 range before ultimately coming back down, because again, you can see there's been some sort of compression here of the volatility index essentially since the beginning of 2022. It's been putting in lower highs, but it also hasn't really moved much further down than where it is today. Although today does mark a new low, at least since January of 2022. Thank you guys for tuning in. Hopefully this was interesting. Make sure you subscribe if you're not subscribed. Give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium. And I'll see you guys next time. Bye.